Okay, so you have a bit of the sweet and the bitter side of the story. Well, let's give you a bit of a list of the sweet side. Federal Account Allocation Committee yesterday decided they're sharing about 800, a little bit above 800 billion naira as for the month of November. So that money is expected to hit the banking system in the next couple of days, most likely before December the 31st. So that's one good news. Not so good news was the level of unemployment going higher to 23.1%. There's a new budget, 8.8 3 trillion naira. In that, well, one of the bad news as well is that the new minimum wage is not happening anytime soon. Bolanle Agbaje is here, part of the economic think tank at Financial Derivatives Company. Good morning.
Morning.
I don't know what to make of yesterday, but a little bit of sweet and not so sweet story, from the budget to the unemployment to the FAC allocation to the excess crude account going down like when your fuel tank or fuel gauge is heading to red. You know that kind of feeling you got?
Yeah.
While you're on Third Mainland Bridge and there's this very snarling traffic. There's no petrol station on Third Mainland Bridge. I haven't seen. Nobody should think of building one, by the way. So that's where I thought about the excess crude account, with about $2.3 billion going down to $631 billion, because we shared most of it to the state governments as part of the Paris Club refund. We spent excess crude account to refund state governments. Well, I just hold my tongue. So, you speak.
Well, looking at, the excess crude account and the state it is at the moment, we've always mentioned times without number, the government should obviously look at other sources of revenue, ways to build up their revenue account and all of that. But they haven't done that. So all they talk about is the budget. Okay, what's our revenue? What's our expenditure? But like the other guy mentioned, he mentioned the fact that revenue is actually a major problem. And because we haven't found ways to build this revenue, that's why, we keep feeding into our savings that, is supposed to protect us in case, oil prices even go down further. So in a case where oil prices go down way below, $60 a barrel, 50. Now we're at about $58 a barrel. If it goes to about 50, we actually have no way to brace ourselves. And we're talking about 2019 budget. We're talking about expenditure. Several projects that we have in store that we can't actually, use or do actually. So, well. Those are some of the issues that we're seeing. And regarding unemployment rate, we expected, although unemployment, we're actually happy about the fact that, unemployment rate has actually, been released after several months. But we already predicted that the unemployment rate would actually, increase. And it's no surprise to us. But the reason why we see this is because, most from the last GDP reports, the Q3 GDP report, we saw that some of these employment elastic sectors didn't actually grow. We saw an agricultural sector didn't grow. We saw that the banking and finance sector didn't grow. And those are some of the sectors that actually employ a lot of these, laborers. And we also see youth unemployment increasing as well, even youth underemployment. But youth underemployment actually decreased. Why? Because in the past few months, we saw, the implementation of the N-Power projects and all of that, which helped, target skills to, some of these youth.
That's one positive. Well, that's a bit of a little positive reading here, moving the needle, as it were, because if youth unemployment is good, that means they have something to do, even if it's just on a part-time basis, as it were. I know a few of those who are younger are going a bit into farming as well. I know a number of youths are also looking at farming. A few of them are into artisanship, whether they're making bags or other items with local fabrics and things like that.
Yeah.
I see that the tailors also have more apprentices these days.
Exactly.
Looks like folks are putting their kids back into that.
Yeah, so it creates more opportunities. But then we also have the case where job creation is not sufficient enough, because you still see a lot of youths that are not actually employed, or some of them are actually doing what does not match their skills. So those are some of the issues that we saw from the release of this data. And also it calls to question what the MPC will do in January. They would have, although they face the normal monetary dilemma of whether to, increase interest rates or reduce interest rates, but now they're faced with a case where inflation is high or increasing and unemployment is way high, GDP is not sufficient enough. So what would they do in that case? Well, what we do expect is that, the MPC wouldn't, make such move, especially at a time when elections are very near. So, those are some of the pondering issues that we think the
Anything
MPC...
about the policy rate will be after the elections, most likely.
Yes,
so
most
we have
likely.
one meeting before the elections, and the next meeting would, of course, be after the general elections. So maybe by then the coast on the political side would have cleared up a little bit. So let's take a look up. We've touched a bit on our external reserves. Is still up there, but again, Naira is depreciating. In terms of what is good and what is not so good, Brent crude has been a whipping boy since October. I feel so much for crude oil, Brent in particular.
Well, with Brent at the moment, we've seen Russia increase production, which is weird because they spoke about oil production cuts and all that, but Russia at the moment is actually boosting its production, and we're unsure why it's doing that. And that's affecting oil prices. Yeah. And also, EIA released a report that in 2019 we should expect more production from the U.S. So that already
Libya is also coming up.
Exactly.
They said the Sharara facility is ready, but they are not pumping yet. I picked that up on Bloomberg and I said, I just scratched my head. I said, oh, Bosun, here we go again. I wish them well there too. But again, if you look at the price of oil and all of that year to date, it doesn't give much to cost to share. What is it in the agri commodities? Let's not conclude this without talking about the agri commodities. Where are we with wheat prices and all of that? And is it too late in the year to think of any of this impacting us before the long holiday?
The USDA released its 2019 report and mentioned that we should expect, increased production with wheat, and that would obviously reduce the price of wheat. Wheat and both wheat and corn are, part of our imports, so we should be excited about that because it means our import bill would actually reduce. Well, with cocoa, Ivory Coast is facing challenges with global climate changes and all that, so that's affecting their production. But it's good news for us because what that does is it increases the prices of cocoa, and that contributes to our exports. But it depends on whether we're doing well to boost our cocoa production
Locally?
Yeah.
Yeah, that's a question. Okay, thank you so much.
Thank you.
It's good to have you here.
Thank you.
It's a great day. Everyone is chewing over the budget and the unemployment. There's something in there for you. But of course, it's a big story. Bolanle Agbaje from Financial Derivatives Company, a member of the economic think tank. Of course, we crossing from the commodities market to the financial services industry. Of course, we are looking at the fixed income space. It's been a very nice year for those who are investing in bonds and treasury bills. Let's come up with that in just about a minute.
Day and night, we are on the road, following all the stories. And it takes a lot to earn your trust, to give you the coverage you've always trusted, because no one has more experience to tell your story, to keep you informed. News at 10.
Let's get a bit of sense of the FMDQ trading day. Of course, yesterday was a little bit. It's been quiet since Monday a little bit because, again, folks are looking at what is on the street as they're beginning to wrap up the year. Let's cross over to the FMDQ Exchange Place where Toba Shuamimo of FSDH Merchant Bank is hanging in there to join the conversation. Toba, good morning. It's good to have you on the program.
Good morning to you too.
Let's share a few moments together on the program, taking us through what has been the performance of the market since the week started. Are we wrapping, or are you folks wrapping the year already? Are investors in that mood already?
Well, we are coming to the close of the year, and the market has been relatively quiet. What we did notice in the T-bills market is that there was a bit of buying interest on the short end, but that isn't too far from the fact that we expect a maturity coming in today, 472 billion, that's for the OMO bill. And we also expect that the FAC inflow will hit the system anytime soon. So that liquidity is being invested already.
Okay, so, but again, why is this very strong interest at the short end? Is there any, are folks looking at what will be the likely performance of the economy, the first MPC in January, which is just about technically 4 or 5 weeks away from now? I'm sure you dealers and investors and analysts will be looking at that very closely. What will be the signaling from the Monetary Policy Authority?
Well, what we expect is that the CBN has been able to maintain what they've been doing so far, and we don't expect any significant change within the policy for now. Most people will be interested as to what happens after the election, February next year. That's where the most interest is at the moment.
Okay. Do you have any update as far as what the debt office is doing with the 70 billion naira final auction for the year?
Yes. So the final auction of the year was held yesterday. 70 billion was offered. It was oversubscribed at 94 billion. There was a lot of interest on the long end, the 10-year bill, with 83 billion out of that being subscribed for. The amount sold was extremely small. It was 5.75 billion, which is less than 10% of the total amount. The DMO, what we would like to think is that they do have a target, which is about 793 billion at the start of the year. As at November, the last auction, they had already realized a significant portion of that. Over 765 billion had already been realized, so they are not under any intense pressure to raise any more funds at extremely high rates.
Yeah, but the new budget is out, so there will be more, of course, of the debt raises in the new year. What's the signaling you folks at FSDH Merchant Bank got yesterday with the new budget?
Well, the new budget, 8.8 trillion, what we did realize is that there's actually a drop in debt servicing. There's actually a drop in the budget deficit, sorry. It's dropped from about 2 trillion to 1.85 trillion. So that does tend to signal that there will be less pressure for funds to be raised. And going by what we've seen, we expect that more of it would be raised through the foreign markets.
What's your outlook for interest rate or the yield curve in the new year from FSDH?
Well, what we expect for interest rate, just like I said, if we expect the borrowings to reduce, there is a slight possibility that interest rates in the local market might tend to remain flat or just a slight dip. But we don't expect any significant activity until after the election holds.
Double-digit yield curve for 2019?
Well, I can only say, well, for Nigeria, I would hope that we'd be able to go down to single digits. But at the moment, it does seem likely that double digits is the reality. Might trend slightly downwards, but right now, double digits is the reality.
Double digits is the reality. As of today, 28th of December.
Yes.
Toba Shuamimo, thank you very much. A fixed income dealer at FSDH Merchant Bank, live to us from FMDQ Exchange Place. What's in the news this morning? Trying to recap some of the big stories over the last 24 hours for you. We got the unemployment data showing Nigeria's unemployment level moving up from 18.8% in the third quarter of 2017 to 23.1% in the third quarter of 2018. That's at the end of September. We're going to take all this unemployment data into the new year. There won't be any other one. Yeah, so we're going to keep digesting those numbers. We have a lot to talk about the unemployment data in the days ahead as we wrap up the year. But don't forget, the budget is also there. We'll continue to pour over this particular appropriations and, of course, the details or the breakdown of it, the numbers into various sectors and activities. We're expecting that to happen over the next couple of days, most likely before Christmas and Tuesday, which is going to be a public holiday, and Wednesday as well. So folks are already getting on the road, traveling out of Nigeria's economic center. The early birds saw them on the highways this morning, already looking for transportation to get out of the city. It's going to be a long weekend holiday, but we're sticking with business here on Channels Television. So let's take a break. We'll be right back. Then let's check it with the marketplace. We need to put some numbers to yesterday's trading and give you a sense of where today's trading is going in 2 minutes.